So we are starting our session right now, and I'll urge you to keep sharing the link with your team members for them to join us, because we are not going to stop here. We have to keep on learning, keep on learning, keep on learning, keep on learning all the time. So please, let's keep on learning. So I'm going to share my screen as we used to do. Today is Monday, and we're going to talk about trade settings. We're going to talk about trade settings, and I've always been saying this is the basis of the business. This is the basis of your trading journey. If you want to learn about technical analysis, if you want to learn about fundamental analysis, if you want to do all forms of analysis and you don't know how to set up a trade, you don't know how to trade. You don't understand trading. The basis of the business is for every individual to develop that ability of being able to set up what? A trade. Right? So you have to make sure that you are going to take this lesson very serious, because it's really going to help you, right? It's really going to help you. All right, so let me share my screen. We're going to talk about the spot trading and then also the futures trading, but I'm going to give more emphasis to futures trading, so you pay attention and then also you listen. Now let me share my screen. Let me share my screen. Let me share my screen. So um okay, now I believe my screen is visible. I believe my screen is what is visible. So okay, let me use my board. Okay, all right. So trade settings. Okay, trade settings. Now, when it comes to trade settings, over here we are trading on both the spot market and futures. Spot market and futures market. And it is important, as I've already said, it is important for every trader to understand how to trade on the spot market and how to trade on the futures market. How to trade on the spot market and how to trade on the futures market can only be understood when you know how to set up trade. That is what we mean. Trade settings. So if you can set up a trade on the futures market, on the spot market, then we can say someone or a trader can trade on the spots and then on the futures. But if you can't set up a trade on either the spots or on the futures market, then you need to take this lesson very serious, because this is really going to help you a lot. And I'm going to take time to explain things into detailed so that you can be able to grasp the meaning of all terms and then also understand how you can set up the trade. So it's purely for trade settings. Now, when it comes to the spot trading, okay, spot trading on Real Q, everything is simplified for you. But what is spot trading and how do you set up spots? How do you set up a trade on the spot market? Over here, spot trading is simple in Royal Q and in crypto markets, unlike the other market spots. But in crypto markets on Royal Q, spot trading is simple. And when we talk of spot trading, that is the ability of a trader to buy assets at a lower price and sell it at a higher price. That is the basic understanding that you will get. You buy an asset at a lower price and sell it at a higher price. And mostly, the spot trading favors a particular season, like a bull season, because during this season, most traders get that attach of being able to for the market to rise very fast, which simply means if you are able to buy assets at a very low price, you can easily make profit on those assets. So on the spot market, we focus on how we can buy an asset at a lower price and sell it at higher price. So you buy asset at point A, then you think of how it can rise from point A to point B for you to make profits. Now, in a case of spot trading, what I've always been saying is you choose to buy an asset at point A, and the price can drop back instead of rising back from point A to point B, so from point A to point B. Instead of the price to rise to point B, it can reverse from point B below point A. That is where we term it as what? Floating. When the actual price is dropping against your actual trade. And when it comes to sports trading, the trader owns the asset himself. Listen, when it comes to sports trading, the trader owns the asset himself. So you buy assets, let's say you buy Ethereum, ETH, you own it. You own a share in what? In Ethereum. And since you own a share in Ethereum, whatever happens to Ethereum also affects you. If it happens that Ethereum is rising, your money in your account will also rise. If it happens that Ethereum is dropping in value, the money in your account will also will also drop in value. That is how the spot market works. Even though falling and rising happens in all parts of the crypto market, irrespective of the kind of trading that you are doing. But actually, I'm talking about the spot market and how rising and falling affects price movements in the spot market. So over here, when it comes to spot trading, using RealQ, trading has been simplified such that once you understand the concept of hmm, setting up a trade on the futures market, on the spot market, you will be able to enjoy profits from both trends of the market, and especially either the market is rising or falling, you get the ability or the opportunity to buy from what we call the dip. That is the spot market. So mostly you might be familiar with the term buy the dip. Buy the dip. And buy the dip is a language that mostly it's being spoken in the spot trading, because anytime the market dip in value, it's expected of the trader to do or to buy a part of that drop, so that whenever it rises, it can make profits. But the question is, how do you set it up so that you can make consistent profits in the spot market, irrespective of how the market drops, so that you can be able to buy the dip and then still make profits out of the dip, right? So that is what we are going to do. So first, let's go to Royal Kill. I guess the sports trading will be very briefly, then I shift the attention to futures trading. So let's go to Royal Kill. Are you with me? Are you with me? Give me one in the chat if you are following. Give me one in the chat. If I'm loud and clear and you are following, give me one in the chat. Give me one in the chat. I guess no one is here. If you're loud and clear and you're following, give me one in the chat. Alright. Very good. That is good. So let's proceed. Let's proceed. So let's go. Let's go to Royal Q. Let's go to Royal Q. So over here on Royal Q. Alright, that is good. So let's proceed. So when it comes to trade settings, this is something simple that wouldn't take you even 50 hours to do this. At just a minute or 30 seconds, you can do this. So first, we have different apps here. So get your Royal Q app. This is Royal Q. So first, tap on your Royal Q app. You click on it nicely. It opens. Now, as it opens, you are going to see these two things here: sports and then futures. Sports and then futures. And I guess you can see that you have the sports and then futures. So when you come here, if you scroll down over here, you are seeing all these assets. You have USDT, BTC, Ethereum, USDC. And on the spot market, you can trade on all these pairs. You can use BTC to trade against other pairs. You can use Ethereum to trade against other pairs. You can use USDC to trade against other pairs. Right? Now, The next thing is that when you come, these are the USDT assets. Okay, so let's tap on USDT. Now, when you click on USDT, you can see that all these assets, you can see to be delisted monitoring, to be delisted monitoring, to be delisted monitoring, to be delisted monitoring. So when it comes to the delisting assets, all these assets simply means now present they are under monitoring, which simply means their state can be changed from to be delisted to an actual asset. But for the meantime, they are all to be delisted and you don't need to get closer to them. Unless otherwise you are already trading such an asset before it got delisted. So when it comes to trading on the spot market, now you see to be delisted and you have to ignore those to be delisted coins. Because any coin that has tagged to be delisted, the community is not positive, or the community may not be positive about that particular asset. Right. So you scroll down, you can see different assets here. So not all those assets that are going to be delisted, not all the assets that we have here that are going to be delisted. So you go through to see those assets that are not going to be delisted. Maybe you have a special asset that you've analyzed and you want to trade on the spot market. You scroll down, so let's see. So you can choose to click on this asset, any of them. Let's click on any of these assets. Now, after clicking on it, you can see this. They said cryptocurrencies carries high risk, high market risk. Trade with what? Caution. You get it? Trade with caution. So even before you trade, Royal, they've assigned all this caution message to you already. So trade cautiously and assesses your risk tolerance. Royal does not guarantee profits or bear responsibility for trading losses. So once you decide to join Royal, if you ignore this message and something happens, you need to understand you don't need to blame Royal. They said Royal does not guarantee profits or bear responsibility for losses. This is one thing that you need to understand. Royal does not guarantee profit. So whatever you are doing, it is a bot, and you need to understand how to configure the bot to use it for your own advantage. Right? You need to know how to configure the bot and then make good use of it to your own advantage. So that's the reason we're having this meeting. So over here, you just click on I understand. So I understand. Now after clicking on understand, maybe you've done your technical analysis already and you know what is happening in the market. And since you know what is happening in the market, the next thing that you decide to do is to come here, you click on create. You click on what? Create. So click on create. After clicking on create, we have Martingale and then also grid. Martingale and then grid. Martingale and then grid. Now, for you to understand Martingale and then grid, and it's about understanding mostly the trends of markets. And we have three different trends of a market. We have uptrend, downtrend, mm, downtrend, and then also range markets. Uptrend markets, downtrend markets, and then also range markets. Now, Martingale is mostly good in uptrend and then also downtrend markets. And then when it comes to the use of grid boats is also good in both uptrend and downtrend, but mostly specifically ranging markets. Ranging what? Ranging markets. Every time I'm going to teach you how the grid bot also works. But for now, let's take time to explain about the Martingale. The Martingale strategy. So over here, you come here, you see these these two different strategies. We have the Martingale strategy and then the grid strategy. So you come here, you click on Martingale, then you click on create. Now, when we talk of the Martingale strategy is applied for a trader to get the opportunity to buy an asset at a lower price, sell it at higher price, and then also anytime the market drops against the trader can be able to buy the dip with tripling effects. So these are the Martingale strategy works. So in gaming, we have what we call tripling effect. So let's assume I have $40 in a trade, or I have $40 as a capital. Now, because the market is not a fixed market which brings consistent wins. Listen, because the market is not a fixed market which brings consistent win, the martingale strategy has been redirected such that now, if I'm trading, I know that definitely the trade will go against me. The trade will do what? Will go against me before it will do what? It will rise in my favor. The trade will go against me before it will rise in what? In my favor. So whenever you become a trader, you should understand that in all times, nothing good will happen without something bad happening. So there is a local proverb that says, before you fly, before you fly, hmm, you need to bend down before you do what? You fly. So you can't just jump without going down. Before you go up, you have to go down. So when it comes to these strategies, you see, all these things are daily life, our daily life, some of the things that happens in the market. Okay, it happens around us. They said before you go up, you have to come down. So when it comes to trading too, before every asset will rise, surely the Martingale principle says that it may go against you first before it rises back in your favor. So what this principle teaches is that if I have 10 million capital, I should think of how I can capitalize my income to ensure I can be able to win more in the market. So therefore, when it comes to martingale strategy, let's assume you go in with a market with a capital of $3 first. Now, this strategy helps the trader to multiply again by tripling his account. So let's assume I have $3. Now the next thing, if the market goes against me and I still want my $3 profit back, now I can multiply it by 3. So the next one I'm going to trade with what? $9. Now, if it goes against me and I still want to make more profits, I'll triple it by 3 again, making $27. So over here, 3 plus 9 plus 27. You can add it. 3 plus 9 plus 27 will give you how much? Will give you 39. If I'm right, will give you 39. So which simply means if I lost this trade, or if the market goes against me, I'll still buy another one with $9. I'll still buy another one with $27, which is increasing my buying power. That is the meaning of the martingale. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. I'm just trying to explain what you mean by martingale strategy, or the application of martingale strategy. All right. So we are not saying something different from what we've been saying. I'm just trying to explain better to you what we mean by martingale strategy. What do you mean by martingale strategy? And martingale strategy has been used over decades. Has been used over what? Over decades. And the principle of martingale, or martingale, is a mathematical principle that follows what we call the tripling effect. The tripling effect. The tripling effect. So what it does is, anytime you know that definitely markets can go against me before I make profits. Markets can go against me before I make profits. So since the market will go against me, I want to seize opportunity to buy from the markets that is going against me. So even though the direction is supposed to go like this, it's supposed to be like this, but rather I entered here and it's taking a reverse here. It's taking a reverse here before it began the journey, the actual journey here. So what the martingale strategy is saying is that now, anytime you go, you see, and this martingale strategy is applied in most parts of the financial world, not only in crypto. In forex, they apply what you call the Martingale strategy. In betting, they apply what you call the Martingale strategy. In different markets, they apply the Martingale strategy. So it is important for you to understand the principle of Martingale strategy. So what we are saying is that, let's assume I entered into a trade. I entered into a trade with $3. It goes against me. Which simply, when I say it goes against me, simply it dropped against my um entry price. Now the next thing that I'm going to do is to multiply it by 3 again, which is going to give me 9. Then if it goes against me, I'll multiply it by 3 again. So 3 times 9, 3 times 9 will give me how much? It's 27. 27, right? Very good. So if it is 27, then I enter 27. If it's not 2, then whatever figure that it is, I enter it there. Which simply means the next thing, if the markets rise, I'm going to make profit on the $3. I'm going to get back my $3 plus profits. Once this $9 rises, I'm going to get my $9 capital, 9 plus 3 plus profits. The same thing applies to all the values here. So the Martingale strategy was strategized or was made to ensure that people can make profits, whereas they will not lose their actual capital in the market. It simply means the more you multiply your trade, the more you assess opportunity to make profits higher than your actual expectation in the market. That is the meaning of Martingale. So after that, you click on trade settings. On trade settings, you have the default setup on Smart Create, and then also we have the actual setup that is made by the trader himself on Manually Create. So when it comes to trade settings, what I've been saying is you have the Smart Create, which is a default setting in Royal Hill, and then Manually Create a special strategy setup by the traders himself based on his actual or specific strategy setup. When we talk of the Smart Create, that is a default setup by the bot, and Manually Create is a strategy setup made by the trader himself. That is a specific setup made by the trader himself to suit his trading strategy. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. For me to know if you're following and you've understood what I'm saying. For me to know you've understood what I'm saying, give me one in the chat. While you proceed, give me one in the chat for me to know if you're following. All right. All right. All right. So now listen, those who join late, I'm talking about sports trading now. I'm talking about sports trading. I'm talking about sports trading, and within few minutes, I'll wrap up with the sports trading. Then we go advance on the futures markets. So now you click on Manually Create. And now this process requires through the same for sports and futures. Both you come to Manually Create, Smart Create. The difference is that, listen, the difference is that on futures, you are not going to see this. Listen, on futures, you are not going to see this. What I'm about to circle here. On futures, you are not going to see this here. This, you're not going to see this thing here. You're not going to see it. You can see first buying amount. On futures, you are not going to see like 12 USDT as you are seeing. But aside that, the rest of the setup remains the same. The rest of the setup remains the same except the leverage, which may be 5x or 10x or whatever x it may be. That is the difference. So the trade settings may be the same here. So you need to pay attention. So now when you come to the futures, we have the first buy-in amount. First buy-in amount. So first buy-in amount. And when we talk of first buy-in amount, mostly you see it as FBA. When we talk of the first buy-in amount, that is the initial amount you want to enter. The initial amount you want to enter with your capital. So let's assume I have $100. I want to use $20 as my initial amount. That becomes my FBA. So it simply means $20. Over here, I'm going to enter $20 here and not $12. Over here, I'm going to enter $20 here and not $12 because that is what I want to use as my first buy in amount. As the name itself depicts, first buy in amount. First buy in amount. So when it comes to trading on the Royal Kill or when it comes to trading on spot markets, you have to understand that always this bot is not derived or was not meant for a trader to go into the market just to gamble. Do you get it? But it is meant for the trader to go into the market by practicing what we call capital management. Capital management. So which simply means this first buying amount here is telling you that you can't go in the market with all your money, but you can capitalize on your income and decide on the first amount you can go in to the market with your capital. Do you get it? So over here, if you want to create, now the first thing that you have to do, they said choose a template. Choose what? Choose a template. And when you see choose a template, it simply means the trader is already having, that is already set up strategy. Already what? Set up strategy that he is going to use. That is what it means. It simply means the trader is having already set up strategy. So if there is no setup strategy to be used, so when you click on my templates, click on it. When you click on my templates over here, you can see we have different strategy setup here. We have different what? Strategy setup here. We have different strategy setup here. We have different what? Strategy setup here. You can see it yourself. Very good. Now, maybe you don't have a strategy setup. Maybe you don't have a strategy setup yet. So what you're going to do is you have to come back here. Now, you decide to fix in your values here based on the strategy you are going to use. Based on the strategy you are going to use. So mostly during a momentum market like this, where the market is very uptrend, where the bullish momentum in the market is very strong, what we've been saying is over here you can decide to go into the market on a spot market with 40% of your capital, 40% of your capital. Just 40% of your capital. Now, why 40%? Because during this season, most of your first buy-in amount is being bought by the market or is being sold by the market with no time wasting. Which simply means if care is not trading, greed index will begin to appear in the market, and a lot of traders will think of how they can just go in the market with all their money at a go, which is very wrong. So you decide to go in the market with just 40% of your capital as your first buy in what? First buy in amount. So over here, if I have $200, I can't go in the market with all the $200, but I can go in the market with 40% of $200. 40% of what? Of $200 as my first buy in what amount. So 40% of $200 as my first buying amount. That is what I'm going to enter here. So let's take the calculator. Can you do that for me? 40% of $200. Can you give me the answer? 40% of $200. Can you give me the answer in the chat box? 40% of $200. Can you give me the answer in the chat box? Let me know the answer in the chat box. 40% of $200. 40% of $200. Let me know the answer in the chat box. Let me know the answer in the chat box. Let me know the answer in the chat box. 40% of $200. Very good. Very good. Very good. Now, very good. Someone may say, is it not too much? Listen, this is the reason. This is the reason. Why are you using 40% here? Why are you using 40% here? Now, you are using 40% because of the market. Listen, because of the market is having what we call bullish momentum, strong what bullish momentum market, which is bull run. So the bulls are excessive in the market, which simply means the probability that your first entry would be bought as compared to your below setups will be very high. Notwithstanding, you need a break, because I've always been saying whenever you open a trade without effective margin calls, it's just like a car without what? Without a brake. And once a car without a brake accelerates, it causes accidents. It causes what? Accidents. Which simply means if I want to be secured in this market, with 40% of my capital in the market, I can use the 60% to control what we call the dip. I can use the 60% of this capital to control what we call the dip. Hmm? Okay, here who is ready to take it about the trading? Who is that? Let me
There is
see.
a baby trying to present to us.
let me. It seems someone refused to mute. It seems someone refused to mute his call or her call. Let me see. Mm, let me check to mute everyone. All right. It seems it has been solved. Okay. Let's proceed. Let's proceed. Okay, so let me make someone co-host before I proceed. Yes, Ambassador Saul, you're my co-host. So you have to be around in case I'm out or there is any disturbance. Let me. All right. Okay, so now let's proceed. So since
Leader
I'm gonna
Emma,
use
there is
hello.
angels requesting for you to make them host.
Okay, okay.
Please.
Is she? I guess she's not around. Okay. Mm, let me see. All right. Okay. Oh, please make me a co-host back. It seems I've removed myself. All right. Okay, so let's proceed. Let's proceed. All right. Let's proceed. Okay, so now what we are saying is simple. Why $80 here? Why $80? Because you are using 40% of your capital. Now, this 40% simply means you are going to use 60% of your capital to control the dip. Now, if it happens that the market is very bare, it will never be advisable for you to go in the market with 40% of your capital. Because the bulls are strong in the market, going in with 40% of your capital will be a prudent way to make more profits. Even if it couldn't buy all your margin calls, you still make good profits. Do you get it? Very good. Now, get back here. So over here, you are going to, instead of $12, you are going to enter for $80 here. $80. You are going to enter $80 here. Now, after entering the $80 here, you know that the next thing that you have to do is to work on your margin call. So you come here, you are going to use the 60% of your capital to open margin call. So when it comes to margin call limits, what does it mean? Margin call limit simply means how many times can I buy with my remaining capital? How many times can I buy the same asset again with my remaining capital? Since my capital was 200 or is $200 and I intend to go in the market with 40% of that, which is $80, now I have $120 remaining. So that's $120 that I'm asking myself. The margin call limit is asking, how much will I want to buy again with all this $120? So if I want to buy 10 times, I come here, I enter 10. It simply means I want to buy 10 more times using the $120. You understand? You understand? I want to buy how many times? I want to buy $40, $80 here. I want to buy 10 times here with my $120 remaining. That is the meaning of the margin call limit. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know if you understand. If you understand that, give me one in the chat for me to know if you understand. If you understand, give me one in the chat for me to know if you've understood. If you've understood, give me one in the chat. Boom, we move. If you've understood, give me one in the chat and let's proceed. Oh, someone is saying your presentation is breaking. Your presentation is breaking. Are you sure my presentation is breaking? Are you sure my presentation is breaking? I guess you have to check your network. 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 All right, so let's proceed. Let's proceed. So, if you have issue with your network, please check it out. Yes, so from very effective response, it is from the person's network. Thank you. It is from the person's network. All right, let's proceed. So please try and then climb a mountain. Try and then climb a mountain or climb a tree, and you get a good network for you to join us. With all due respect, let's proceed. All right, so over here, you are entering $80 here because you are using 40% of your capital, which was $200. And out of the $200, you have $120 remaining. And that $120, you decide to open 10 margin calls here. 10 margin calls. Now, what does the 10 margin calls means? So the next thing that you have to come over here, you can see whole position take profits ratio. Whole position take profits ratio. Now in trading, we have what we call TP. TP simply means take profits. TP simply means take profits. So you can see that is the short term in trading. No, most of the abbreviated terms in trading have their own meaning. So over here, when you come here, we have TP, 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 which is take profits. Over here, the take profit is expressed in percentage. That is the reason you are seeing whole position take profit ratio. The ratio should tell you that it is expressed in percentage. It is expressed in what? In percentage. Right? So when you see 0.2, sorry, when you see 2%, that is 2% is an expression of what? 0.2. So you are just going here for just 0.2% of your capital. Sorry, 0.2. So that is the percentage, which is 2%. Right? Now let's proceed. So over here you can see that the margin call limit, which is 10, and then I take profits. So let's scroll down. I take profit is maybe 3% here or 2% or 1%. Now when it comes to the take profits, one thing about the take profit is that, listen, one thing about take profit, because this is trade certain, so I'm taking time to explain all these terms to you. Now one thing about take profits is that the higher the take profits, the more you can be relayed in the market depending on the price movements. Now let's assume you go into any market, someone is having $100 to buy something, another person is also having someone is going to buy something in the market with, let's say, he's going to buy 1,000 quantities of a commodity in the market, 1,000 quantity for commodity in the market, and another person is also going to buy 2 quantities of a commodity in the same market. Among these two people, between the person having going to buy 1,000 quantity and the person going to buy 2 quantities, who will get home faster? Who will get home faster as compared to the other? Who will get home faster as compared to the other? Give me answer in the chat. Who will get home faster as compared to the other? Who will get home faster as compared to the other? One is having 1,000, going to buy 1,000 quantity of commodities, and the next person is also going to buy 2 quantities of item or commodities. Between these two people, who will get back home faster? Very good, very good. Which is the person going to buy 2 quantities. Okay, the person going to buy 2 quantities of commodity. Very good. So over here, the take profits. If you are too greedy to increase your take profits, listen, If you are too greedy to increase your take profits, what will happen is that someone with just a little or a less take profit will just get out of the market, whereas you will still be in the same market complaining that what is happening. So someone will decide to go for 1%, and the minimum that you can go is 1%. Someone can go for 20%, another can go for 30%, another can go for 3%. And this 1% will first get out of the market, followed by the 3%. And who did that?
But I'm sorry, please unmute yourself because I mute everybody. Kindly unmute yourself. They won't be able to unmute again. Thank you.
All right, let's proceed. Okay, so over here, you are seeing the take profit ratio. Now, the next thing is the callback. The next thing is the what? Is the callback. So you come here to, so if your take profit is 1% or 2%, you change your callback to 0.1 or 0.01. Now, when we talk of the callback, we have the whole position take profit callback, and then also the buy-in callback. The whole position take profit callback. So over here, we mean if you want to make 1% profits, anytime the markets rise in our favor of our 1% and it drops 0.1, our take profit should be triggered. Anytime the markets rise 1% and drops 0.1 in our favor, our take profits should be triggered. Our 1% take profits should be triggered. That is the meaning of the callback. That is the meaning of the whole take profits callback. That is the meaning of the take profits or callback. So anytime the markets rise in favor of our position that is just 1% and it drops 0.1, our profit should be triggered. Right? Good. Then we have the buy-in callback. The buy-in callback. So that one too, you come here, you change it to 0.1. Now, when we talk of the buy-in callback, this is a special feature in Royal Kill which ensures that the trader gets multiple or gets more profits or profit beyond his take profits. So let's assume sometimes you can choose to set 1% or 2% take profits, and you earn like maybe 3% or 4% because of your buy-in callbacks. So you see, when it comes to the futures trading, sometimes when I give signals, I say use 0%, which simply means use 0 as your buy-in callback, which simply means you are not going to get any extra profit, even if the market happens to be too good. All what you want is your 2% to be triggered. That is the meaning of the 0% or the 0 callback. So the callback helps the trader to generate extra profit anytime the market is having more momentum to derive extra profit to the trader. That's the power of using Royal Kill. So you come here, you enter 0.1. Then you come to the take profit callback to, you enter what? 0.1. Now, after doing that, I'll type them. So over here, we said $80, 80. This place is going to be $12. Now, 1% or let's say 3%. Now you come here 0.1. You come here 0.1. Then you come here 0.1. Now, after that, you click on advanced settings. After that, you click on what? Advanced settings. So when you click, this is advanced settings. This is it. So let me turn it off first. So we have advanced settings. So this is what? Advanced settings. Now come to advanced settings. Come here. Click on advanced settings. So let's do that. When you click on advanced settings, you are going to see here we have cycle and then trigger price. Click on the cycle. Click on the what? On the cycle. Click on the cycle. Now click on the what? On the cycle. So click on it nicely. So let's do that. When you click on the cycle, you are going to see these two things here, cycle and then one shot. Cycle and then one shot. Now, when we talk of the cycle, this is what the cycle means. Let's assume on the spot market, you buy assets at point A. Now, In your expectation, the market should rise from point A to point B before you do it to make profits. And because on the spot market, you buy low and sell high. Once the assets rise from point A to point B, it simply means the market has risen to another price, or the price has risen to another step, right? So over here, when you set up your trade on cycle, once this trade is sold from at point A to point B, it's sold. It will buy it again from point B to point C. When it's sold, because it is on cycle, it will repeat the process. It will continue to repeat the process without reversing. Which simply means anytime the assets rise again and it's sold, it will buy it at that same point again. Which in other terms, logically, it may not sound good to affect your trade. It may not sound good to your favor your trade, because your expectation on the spot market is to buy low and then do a sell high. Now, so if this is so, come here, click on one shot. When you click on one shot, it simply means anytime the trade is sold out of the market, you want to make a special decision for yourself. You want to make a special decision for yourself by going on another trip on a different trade. Either you want to decide on trading on the same asset again, or trading on a different asset. So you click on one shot. Now over here, when you come here, you have trigger price. Trigger price, let it be. Unless you are using indicators, and that lesson will be handled another session by another leader. So unless you are using indicators, if you are using indicators, that one is going to be different. If you are using indicators, that one is going to be what? Is going to be different. If you are using indicators, that one is going to be different. But since you are not going to use indicators, let it be on trigger price and proceed with your setup. So after doing that, you click on what? You click on save. But then you have your margin configuration that you've not done. So you come here, click on margin configuration. Click on margin configuration. Now on margin configuration, listen. On margin configuration, are you following? If you're following, give me one in the chat. Okay, so they said please come again with the callback and take profits. All right. If you're following, give me one in the chat. If you're following, give me one in the chat before I proceed. If you're following, give me one in the chat. If you're following, give me one in the chat. Very good. Very good. Very good. Very good. Now let's proceed. Let's proceed. I want to ensure you understand the trade settings this morning. I want to ensure you understand the trade settings this morning. I want to ensure you understand the trade settings this morning. So let's proceed. Let's get back again. So over here, what we are saying is this. What we are saying is this. So what we are saying is simple, and this is what we are communicating about. We say take profits. Okay. When we talk of take profits, let me go back first. When we talk of take profits here, take profits callback, buying callback, and then take profits itself. What we are saying is that when we talk of take profits, it is simple. That is the profits or the percentage profits you want to make on your capital when the markets rise. When the markets rise. So if I set 2% and my capital is $5, it simply means I'm going to make 2% of what? Of $5. I'm going to make 2% of $5. If my capital is $1,000 and my take profit is 2%, I'm going to make 2% of $1,000. That is the meaning of the take profits. And what we are saying is that the higher your take profits, the higher your profits do, but the more you can also be delayed in the market. Why? Because at the end of the day, the person having low take profits will make his profit get out of the market before you. That is the reason why I brought that illustration of two people going in a market to buy commodities. Someone is going to buy more commodities of 1,000, let's assume 1,000 commodities. Another person too is also going to buy just two quantity of what? Of the commodities. Which simply means the person going to buy two will get his two commodities, get out of the market, get back home, while this person will still be there because is going to for large quantity of what? Of commodities. That is all what we said. So let's proceed. Let's proceed. I'm sure you've understood now. I'm sure you've understood now and you will allow me to proceed. I'm sure you've understood now and you will allow me to proceed. All right, thank you. Let's proceed. So click on margin configuration. That is the next thing. Click on margin what? Configuration. On margin configuration, we have the first call, second call, third call, fifth call, fifth, sixth call, like that, up to the 12th call, because we said we want to buy 12 margin call limits. Hope you remember. We said we want to buy 12 margin what? Call limits. Now over here, over here, the next thing that you are seeing is what? Is multiple buy-in ratio. Or what is happening? So the next thing you are seeing is your multiple buy-in what? Your multiple buy-in ratio. That is what you are seeing. And what does the multiple buy-in ratio means? Now the multiple buy-in ratio is simple. What it's saying is simple. What the multiple buying ratio is saying is simple. How many times do you want to buy that asset with your remaining capital? That is the reason you open the margin call limit. How many times will you want to buy the drop with your remaining capital? So we said we have $120. Mind you, our capital was $200. We have $120 remaining, and our margin call limit is what? Is 12. So we can decide to divide this 12 by 120, which will give us the amount that we will be buying at each drop. Do you get it? 120 divided by our total margin call limit, which is 12, will give us the amount we will be buying at each drop. So let's do that. 120 divided by 12. Let's see. Let's get our calculator. So 120 by 12, that is going to give us 10. 120 divided by 12, that is going to give us what? It's going to give us 10. So we have the 10 here, which simply means each drop, we are going to buy $10. Each time the asset drops in value, we are going to buy $10, because we have 120 and we said we want to buy 12 times. 12 times. 12 times. That is the number of times you want to buy. That is our margin call limit. The margin call limit is the number of times you want to buy the assets. So we said we want to be buying each drop, you'll be buying till 12 more drop. Till 12 more drop in the market. So 12 divided by this, or 120 divided by 12, that is going to give us 10. That is going to give us what? 10. So now let's go back. Now over here, this is what they are saying. We know we'll be buying $10 at each drop, but the question is, how many times will we want to buy the $10? Do we want to buy the $10 once here, or we want to buy the $10 at each different times? So over here, when you see 2, it simply means that is you want to buy 2 times of your $10. 2 times of $10, or sorry, 2 times of your first buying amount, which we are expected to buy each time you want to buy $10. So if I say I want to buy 2 times, it simply means I want to buy 2 times what? 10. 2 times 10 will give me how much? 20. If I say I want to buy 4 times, that is 4 times what? 10. That is going to give me 40. If I want to say I want to buy 16 times, that is 16 times 10. That is going to give me 160. You understand that? If you understand that, give me 1 in the chat. If you understand that, give me 1 in the chat. If you understand that, give me 1 in the chat. If you understand that, give me 1 in the chat. All right. All right. Yes. So let's proceed. What we are saying is that you have the multiple buying ratio, multiple buy-in ratio. And this multiple buying ratio, what it's saying is simple. Now, how many times do we still want to buy that asset again? And you are seeing the default setup is 2, 4, 8, 16, 32, and so on and so forth. Now, what we are saying is our actual money remaining is 120, and we said we want to buy 12. Anytime the asset drop, each drop we want to buy one. Each time the asset drop, we want to buy again until 12 drop. Okay, so our total margin call limit is what? Is 12. That is, we want to buy 12 drops in the market. Out of the 12 drops, when we divide 12 by 120 or 120 by 12, we are going to get 10. So over here, it simply means we are deciding to buy $10 at each drop. $10 each drop, you are going to buy $10. But the question is, how many times are you going to buy the $10? So for us to get the number of times you are going to buy the $10, what we are going to do is, if we decide to enter 2 here, it's going to be so dangerous for us. So we first need to go and calculate how we can do that. We first need to go and calculate how we can do that. And since we know we'll be buying $10 at each drop, we can divide this 10 by our FBA. By our what? FBA. FBA. And that will give us the number of times you want to buy at each drop. The number of times you want to buy at each drop. So what was our FBA? Our FBA was how much? How much was our FBA? That is $80. So we take our calculator back. 10 divided by 80. That is going to give us 0.125. 0.125, if I'm right. 0.125. 0.125. But the question is, can we enter all these 3 decimals? No. It can take up to just 2 decimal places. Just 2 decimal places. So let's see 0.12. So over here, let's come here. It simply means we want to buy 0. Where is it? 0.125, which is 0.12. If you run it to the nearest number, let's look at it. 0.12. Now, what does the 0.12 means? It simply means if we multiply 0.12, 0.125 by our first buying amount, FBA, it should give us 10 because we want to buy $10. So let's look at it to see 0.12 times 480, right? 80 is our first buying amount. That is going to give us 9.6. So let's look at 0.3. I'm doing something here. So 0.3 times 80. That's going to give us 10.4, which is going to exceed our capital. Which is going to, the 10.4 exceed what? Our capital. So 0.12 will be good. Since we don't have more than $120, when we do it 10.4, it will exceed our capital, which will bring inaccuracy in our tradings. So it's better we reduce it to 0.12. Do you get it? So over here, 0.12, 0.12, 0.12, 0.12, 0.12 to that last call, that is a 12 call, so 0.12, 0.12, like that, 0.12, 0.12, 0.12, 0.12. Now, this is it, 0.12. So from the first buying amount to the last We are going to buy 0.12. And 0.12 is equivalent to how much? 9.6. 9 point what? 9.6. So 0.12 times 80 will give us 9.6. It simply means each drop, anytime the asset drops in value, we are going to buy 9.6. Anytime it drops, we are going to buy 0.12 times, which is going to give us 9.6. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. So someone's asking, can the drop be adjusted? Yes. They see the first buy amount was 80 and not 10, of course. Can we proceed? Can we proceed? So what we are saying is simple. So let me go over just one. Can the call drop be adjusted? Yes, anytime you want to adjust it, you can adjust it. The percentage call drop. The percentage call drop. So let me see. Yes, it can be adjusted. It can be. You are talking about the margin call drop, right? It can be adjusted. So listen. In brief, what we are saying is simple. Our money was $200. We've used 40%, left with 60%. Out of the all the 60% is what we are going to use. We said we want to open 12 margin calls. Now, 12 margin calls simply means you have $120. That is 200 minus 80. That is going to give us 120. So you have $120 remaining. Now, divided by 12 is going to give us 10. So it simply means each drop, when it comes to the multiple buying ratio, each drop we are going to buy $10. This is the multiple buying ratio. Each drop, anytime the asset drops, let's say 3.5%, we will buy $10. But when you get here, they said it is there was a default setting here that is giving us 248, whereas our money too is not enough to tally with that value. So we need to find a way to calculate and fix in our own values there. So what we said was that now this is a simple way we can do this. Since we know we have 120 and we are going to buy that is divided by 12, that is going to give us $10. Now we have to come here, we divide this 10 by our first buying amount, FBA. That is going to give us $10. Okay, that is going to give us, that is going to give us 0.125. 0.125. So anytime we multiply 0.125 by our first buying amount, which is 80, we are going to get $10. We are going to get $10. But over here, it's unfortunate we don't have 3 decimal place. We can't enter 3 decimal place here. So we said it should just be 2 decimal place, 0.12. So anytime the asset drops 3.5%, we are going to buy 0.12 times. And 0.12 times is equivalent to 9, is equivalent to what? 9.6. It's equivalent to 9 point what? 9.6. So it simply means here we will buy 9.6, 9.6, 9.6, 9.6, 9.6, 9.6. That is what we are saying. So 0.12 times 0.12 times 80 will give us what? 9.6. Is that difficult? 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 It's not clear. How did you come up with the 0.12? Okay, so I just joined. Okay, so can we make the multiple buying 0.125 to make it 10 per margin call? So, okay, so what we are saying is this. Listen. The whole thing is this. The whole thing is this. Listen, I want you to understand this once and for all. Margin call, multiple buying ratio. Multiple buying ratio. We realize that we have 120 remaining divided by 12. The 12 is our total margin call limit, which is going to give us 10. Now, for us to know the number of times you can buy, that is 10 divided by our first buying amount, FBA, which is 10 divided by 80. That is giving us how much? 0.125. 0.125. But over here, when you get here, we can't enter 0.125 here. That is our problem. We can't enter 0. Because it can contain up to 2 decimal places and not 3. And as it stands, if we run it to 0.13, listen, because it is not up to, it can contain 2 decimal places. If you decide to run it to the nearest whole number, that is 0.13, it will give us 10.4 and not $10. Whereas our capital is not up to that. You see, if you multiply 10.4 times 12, 12 times 10.4, it is going to exceed our capital. Do you get it? It is going to exceed our capital. So it is better, it is prudent for us to use 0.12 since it was 0.125. Let's use 0.12 and 0.12 give us 9.6. And it is better for us to have this than to increase it, and then it wouldn't be able to fix up our capital. Now, do you get it? Do you get the reason we got the 1.2? Have you got the reason we got the 1.2? So over here, it is 1.2, and that 1.2 is going to give us 9.6 USDT at each drop. 9.6, 9 point what? 9.6, 9.6, 9.6, 9.6, like that to the last call. To the last call. Now, get back to the call drop. Get back to the call drop. So over here, from the first to the last, you can change it to 0.1, sorry, 0.5, 0.5, 0.5. Now, should in case it happens that the call drop was given, sometimes the percentage drop will be given. Sometimes the percentage drop will be given. Maybe you see 15% drop, 5% drop, 4% drop, 20% drop. Now, what does it mean? It is simple. If you want to get the call drop, listen, trading does not have a fixed formula. Trading does not have a fixed formula. Provided it is working, you don't have problem. And it is giving you the results, you don't have problem. Now, get here. When you come here, you are seeing this 8, 10, 12. So sometimes maybe signal is given and they said call drop is 20%. 20% call drop. Just come here, divide the call drop by the total margin call limit, which is 20 divided by 12. Let's look at it. 20 divided by 12. Where from the 12? The 12 is our total margin call limit. So 20 divided by 12 will give us 1.6 or 1.7. Okay? 1.6 or 1.7. When I say 1.7, it simply means I've rounded it to the nearest whole number. So since it's 1.66, I can choose to do it 1.7. Right? So over here, you come here. Since the trade is asking you to make it 20 call drop, so 0.66, this is 1.66, 1 point what, 66, 1.66, 1 point what, 66, 1.66, 1.66 to the last call, 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 66 to the last call, 1.66, 1.66, 1.66. Now, it simply means anytime the asset drops, listen, it simply means anytime the asset drops, listen, anytime the asset drops 1.66%, you want to buy 0.12 times, which is 9.6. Anytime the asset drops 1.66%, you want to buy 0.2 times, which is 9.6%, which is what? 9.6%. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know if you've understood. If you've understood, give me one in the chat. If you've understood, give me one in the chat. Yes, it is being recorded. It is being recorded. If you've understood, give me one in the chat. If you've understood, give me one in the chat. If you've understood this, give me one in the chat for me to know if you've understood. Very good. So please repeat. I lost my network. I mean, unless we change the network. Now that you've lost your network, unless we change the network. Hey, you lost your network. We won't change the lesson. We will change the network instead. Maybe. All right. So that's fine. So please say one more time. Come again with how you got the is it the 1.6? Come again with how you got the 1.66. Come again with how you got the 1.66. All right. So if you lose your network, change the network. Don't change the lesson. Once you lose your network, change your network. Don't change the lesson. Yes. Once you lose your network. All right. Let's proceed. So let me see. Please, how does the signal givers determine the call drop? How does the signal givers determine the call drop? Yes, when a signal is analyzed, the call drop is indicated through by analyzing the signals. By analyzing the signals. So whoever that has been analyzing signals, either using trading view, would understand how the call drops do what works, and it's indicated there. You will see maybe 20% or 30% or 50%. So you will see all those things there. Yes, you can do that. We can do that. So you can watch this live on YouTube. So let's proceed now. Let me go over again for the last time. Both the call drop and then the multiple buying ratio. Both the call drop and then the multiple buying ratio. Now we said with the call drop, when we talk of call drop, that is the number of times, or sorry, the percentage drop of the assets. Every asset we see in the market, we said it's rise and fall. And anytime it is rising, it's rising in percentage. Okay? And it also falls in what? In percentage. So what we are saying is, over here, if there is no fixed setup, you can come here. There is no indication that use 20% drop, use 30% drop. You will just come here, 0.5 at least, 0.5, 0.5, 0.5, 0.5, 0.5 to the last call, 0.5, 0.5, 0.5, 0.5, 0.5, and then 0.5. You see this thing, if you don't take care, it can annoy you. If you don't take care, it can annoy you. From the first to the last, 0.5. Oh, from the first to the last, 0.5. Oh my goodness. Oh my goodness. You see? So now you've understood that That is the meaning of the 0.5. Now, I said sometimes signal can be given. Sometimes signal can be given and you will see 20% drop because the drop was given in the signal. If it happens it was not given, just come here, go straight away, do what you have to do. Even if it's 1% drop that you want to be using, it's your choice. One signal is given and it is indicated here. You come here, if they say 20% drop, 15% drop, 5% drop, or whatever, 10% drop, just come. If the drop was indicated here, just come here. Or what you should do is your total drop, that is 20% drop, that 20% drop divided by your total margin call limit. Now our margin call limit was 12. So 20 divided by 12. If it happens that your drop is 5%, 5 divided by 12. It's simple as ABC, then remove. Do you get it? If it is 2% drop, 2 divided by 12, then remove. Is it difficult? Is it difficult? Let me know. Is it difficult? Is it difficult? Yes, or because I did not save it. Is it difficult? Let me know. Is it difficult? Very good. 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 You see, there is a difference between no and no. There is a difference between no and no. There is a difference between no and no. One day, English will take us to court and we will not get any lawyer to justify our case. There is a difference between no and no. There is a difference between no and no. And one day, English will take us to court and will not get any judge to justify our case for us. Hey, let's proceed. Let's proceed. Let's proceed. All right. So after doing that, you see you have everything here. So if it is 0.5, you come here 0.5, 0.5, 0.5, 0.5, 0.5, 0.5, 0.5, 0.5, 0.5, 5, 0.5, 0.5, and then the last part 0.5. Now you come here 0.12, and you know the reason we have 0.12, right? 0.12, 0.12, 0.12, 0.12, 0.12, 0.12, 0.12, 0.12. Look at it, 0.12, and then the last part 0.12, 0.12, and then 0.12. After that, you click on confirm. After clicking on confirm, since everything is intact here, you click on what? You click on save. After clicking on save, you click on confirm. Now you can activate. You come here. We have the three strategy mode. We have the three strategy mode. We have the three strategy mode. So you come here. You click on this. We have the whole warehouse mode, sub-in mode, and then sub-in mode real-time settlement. Whole warehouse mode, sub-in mode, and then sub-in real-time settlement. Now this is simple. When we talk of the whole warehouse mode, it helps you to buy assets from your first call, or it enjoy profits from the first to the fourth call. And then both the sub-in mode and the sub-in real-time settlement buy assets from the fifth call to what? Infinity. From fifth call to what? Infinity. 999 calls. 999 what? Calls. So to what? Infinity. Now, the difference between the sub-in mode and the sub-in real-time settlement is simple. With the sub-in mode, it buy your assets for you from the fifth to infinity call for you. Yet, when it comes to the usage of your call drop and then also your profit making, it will buy and do the selling for you. It will buy and do the selling. It will buy and sell, buy and sell. But the fact is, the profit that is made, that is what we call the sub sales, will be used to be distributed to the same market again, so that your average price can be drawn closer to your current market price. So that your average price can be drawn closer to your current market price for you to make fast profits in the market. So when it comes to the sub-in mode real-time settlement, it's good for someone who is having the expectation of getting out of the market, especially in a very fast movement. Which simply means you're not going to get those extra sub sales profit that you are supposed to get. The sub sale profit that you are supposed to earn, you are not going to get. It is going to use that to be distributed to the market. Now, the opposite of it is the sub-in mode real-time settlement. It's the same, it's buy from the fifth to the last, but then it will generate the sub sales to the trader as real-time profits. As real-time profit. That's the reason we call the sub-in mode real-time settlement. Real-time settlement. So it generates the sub sales to you as a real-time profit. Real-time profit. Do you get it? It generates the profit to the trader as a real-time profit, which is recorded and which is earned in your account. So always what I've been saying is there are two people in every market. There are two people in every market. One, people who are calling for fast sales. Fast sales. And people who are also calling for good sales but good profits. But good profits. Every market. If you like go to wherever market you find yourself. If it's Nigerian market, go there. If it's the Cameroonian market, go there. If it is Ghana market, go there. You will see these people. There are some people who are in this market. All what they want is how their goods will be out of the market. They don't want their goods to always be in the market. And there are people too who don't care how long it will be in the market, provided they will be making good profits, they are okay. So someone may ask, between sub-in mode and sub-in real time, which one is good? Yes, they are all good, depending on your understanding about it. That's the reason I'm taking time to teach you this. But I always advise sub-in mode real-time settlement is good because everyone wants profits. That does not mean that if you choose sub-in mode real-time settlement, your trade will not be delivered on time. It will be sold. But you should understand the work of the sub-in mode because that is its main purpose. That the profit you are making is to still use that profit to be distributed to the market again. All right. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know. If you understand that, give me one in the chat for me to know. So, if you understand that, give me one in the chat. Let me see. The call drop, is it considering the current market price? I mean the entry price. Yes. So, the call drop that you are going to buy, that is your margin ratio, is going to be factored on the new price. That is the reason we call it the average price. So anytime it's buy new, it adds up to a new price for you. That is called average price. So that is it. So I guess that is clear. Okay, so guys, I think I have to give you the opportunity to ask a few questions. Now, let me get back here and add something small to that. All this strategy can be used on the futures market too. It can be used on the futures market, but the slight difference is this. The slight difference on the futures market is this. Listen, the slight difference on the futures market is this. You see, when you come here, we have the futures. When you come here, we have the futures. It can be used, the same knowledge can be applied. The same knowledge can be applied on the futures as well. But this is the slight difference. You see, you come here, you click on futures. So over here, the liquidity that flows in futures is different from the liquidity that flows on spots. The liquidity that flows in futures is different from the liquidity that flows on what? On spots. So always you have to understand that. So don't think since you are trading the asset on spots, it's still the same as on what? On futures. No. So just click on futures like this. Click on futures. After clicking on futures, scroll down to any of the assets you prefer to trade. So you click on it nicely. After clicking on it, now below we have create. So on futures, when it comes to futures, automatically it uses what we called Martingale. Martingale is automatic. Grid is not function. It doesn't function on what? On the futures markets. Grid function on spot and spot Martingale, and then also spot grid. So over here, you come here, you click on what? I understand. On futures, we have the long and then the short. We have the long and then the short. And when we say someone is on long, it simply means that person is bargaining for a price to rise or predicting for the price to do or to rise. And when we say short, it simply means another person is also predicting for the price to drop. That is the meaning of long and short. So over here, you come to short, you click on short or you click on long. So let's do that together. So after clicking on that, you click on trade settings. You see, whatever strategy, whatever setup that you've done, it already exists. So you just choose. As you come here, you see when you come here, all the strategy that I've set already existed. So I just tap on it. After tapping on it, what is going to be the difference? What makes the difference here is this. My leverage first. What makes the difference? The slight difference between the spot and the futures is this. One is what? My leverage. Two is this. So I just need to temper and work on these two futures, then I'm done. I just need to temper and work on these two features, then I'm done. So I have to come here. Leverage. What is the leverage I want to use? What leverage do I want to use? We have 2x, 10x, 20x, 30x. So over here in Royal Kill, it gives a maximum standard leverage of 20x. A maximum standard leverage of what? Of 20x. A maximum standard leverage of what? Of 20x. Now, you come here, if you want to use leverage, you use your leverage 10x or 5x or 2x. Now, the next thing is, when you come here, you see, I don't know whether it's because I've traded on this asset before or what. Let's go back and see if you get different assets. Now, let's see, big. Click on create, trade settings, manually create. So you can see, I want to teach you something simple, then I bring this session to an end. Over here, God permit, tomorrow is Tuesday and another session will continue on Wednesday as we used to do trade, understanding futures market. So pay attention to that. So over here, you can see this. It simply means 557 big is equal to 5.0673. So if I want to use 100 USDT here as my first buying amount, I just need to come here, divide this 5.067 by 57. It simply means 57 big is equivalent to 5 USDT. So if I want to get one big, I have to divide this 5 by the big. Then if I get the value, I multiply by this. So it is simple. Let's come here. Let's look at this. 57. Let's get a calculator. 57 divided by 5.0, 5 point what? 0673. 5.0673. That is giving me 11.248. 11.248. So 11.248 times 100 will give me 1124.8. So let's look at it. 1124.8. If you give us 100, 1100 and what's it? 1124. 124. 0.8. So we can run it to 1,125. Very good. 1,125 is giving us how much? 100 USDT. 100 USDT. So since we needed the value of big that can give us 1,000 USDT, we just divide 57 by 5. The value we get, you multiply by the amount we want to enter there. Simple. You get the quantity of big to enter in USDT. That is all. All right. On this note, let me come here. If you understand that, give me one in the chat for me to know. If you've understood that, give me one in the chat. If you've understood that, give me one in the chat. If you've understood that, give me one in the chat. You've not understood, you don't understand, you don't understand, you don't understand, you don't understand. Drink water this morning. Drink water this morning. For the future big settings, using 100 as first buying amount, please use 100 as the total trading capital since minimum amount is 5. Since minimum amount is 5. All right, let's proceed. I'm only touching on the first buying amount. Listen, I'm talking about your first buying amount. And using 100 here, listen. The 100 you see here simply means you are using how much to trade. Tell me. Can you tell me? Let me know if you understand the futures trading very well. Written 100 here means how much capital am I using to trade? Type the answer there if you know. Type the answer there. I'm coming there. Writing 100 here simply means how much am I using to trade? How much am I using to trade? If I write 100 here, how much am I using to trade? How much am I using to trade? Some are saying 1,000, some are saying 200, some are saying, oh my goodness, boom, boom, hey, my goodness. It is 10x, 10x. You saw it there, 10x. It simply means my real capital is $10. It simply means my real capital is what? Is $10. It simply means my real capital is $10. So those typing 100,000, it simply means my real capital is $10. So my real capital is what? Is 10x, which is 10 times 10 giving me 100. Now, what we are saying is this. If you say because the minimum entry is 5, if you enter 5 here, listen, because you are seeing 5 here, listen, because you are seeing 5 here, if you come here and you enter 5 here, divide 5 by 10 and see the value you get. It simply means you are using like 0.5 to trade as your first buying amount. And you will not even get $0.1. Do you understand? I don't know if you understand. Do you understand that? Yes. So if you don't take care, you may end up entering something there and you will never value the profit you've made because it won't make sense to you. Why did I use $10? Why did I use $100 and look at the profit I'm making? It won't make sense to you. Do you get it? So over here, I'm channeling the energy not on calculating, but just calculating for this first buying amount. Then we bring the session to an end. How you can calculate for the first buying amount. Then we bring this session to an end. It is important. So let's go back. Let's get different assets. Let's go back. Let's get different assets. Let's go back and get different assets. These assets are bringing money. I can see more money here. Can see more money here this morning. Now, you click on create. You click on understand. You click on trade settings, manually create. You can see over here, they said 43 Biko. Biko. 43 Biko is equivalent to 5.1127 USDT. 43 Biko is equivalent to 5.1127 USDT. So what we are saying is, if I want to use my leverage is, let's assume 10, okay? Let's assume I want to use 10x as my leverage. So I come here, I click on 10. Since my leverage is 10, what I'm going to do is that I will decide, okay, maybe I have $1,000 capital and I want to use $10, 10 as my first buying amount. $10 as my first buying amount simply means 10 times 10, which is going to give me 100. So over here, I'm going to enter 100 here. Entering 100 here simply means I'm using $10 to trade. If I enter 200 here, it simply means I'm using $20 to trade because my leverage is 10. So if I want to know the amount of Biko that can give me 100 USDT, I just have to come here, 43 Biko. Biko. 43 Biko divided by 5.11, let me see, 27. That is going to give me 8.4. So should I multiply 8.4 times 100? That is going to give me 840. So if I come here, 840 give me how much? 99.897. So let me see 8.41. Let me see 42. Okay, 8.42 is giving me 100 times 100.1138. 100.113 what? 38. So over here, 100 points, that is 842 Biko is equivalent to 100.1138. This simply means I'm using $10 to trade. I'm not using any huge money, $10. That is the meaning of leverage. And the next session on today or tomorrow or Wednesday, when we talk about understanding futures trading, where you explain the leverage and all those related terms and features, I guess you understand. All right, let me end here. If I have any question, ask. Then I'll give time to explain before I bring the session to an end. All right, so please be using small capital as you are illustrating $1,000 capital is much. Hey, please be using $100 capital as an example. Hey. My goodness, about $1,000 and $100 are the same capital, just that one is higher than the other. So the example is still the same. Yeah, so if you are using 5x, it's simple. It's still the same. So 5x. If I'm using 5x, I just come here, I change it to 5x. Then if I want to use $10, as my first buying amount or my margin amount, it's going to be 5 times 10. That is going to give me 50. So if I come here, the calculator is here. So just let me do the calculation. Here's the calculator. So 43 Biko divided by 5.1147, that is going to give me 8.407. So 8.4071 times 50, that will give me 420.355. So let's see, 420.355. So let's assume 421, and that is giving me 50 USDT. So 421.5 is giving me 50 USDT, which simply means if I divide 50 by 5, that is, I'm using how much? Yes, so that is it. I'm using $10. So you get it. So I think it's simple. Provided you understand the calculation, it doesn't matter the amount of money you are using. It doesn't matter the amount of money you are using. Why is the future coin not showing in my RoyalQ app? I don't get what you are asking. Let me see. Long means futures. Maybe you've not added it. You've not added all the coins. So go and add. If you want to add all the coins, someone say it's network. If you want to add all the coins, just come here. It's all part of the trade settings class. So let me take time to explain that. If you want to add all the coins, just come here. Click on this. Click on this. Come here. Click on manage. Click on what? Manage. After clicking on manage, let's see. You click there. You are going to see sports futures. Then come here, click on futures. Then below you can see all at the down. You can see all at the down. Then you can also see add at the down. So after that, click on all. You see, it is not tapping because I've added everything. Then you click on all. That is all. Everything will be added for you to consider your trade. All right. How much profit will 10 give me? It depends on your take profit. How much profit will $10 give me? So please, when it comes to futures trading or when it comes to trading, whatever profit you want to make will depend on your setup, your take profits, include all forms part of your setup. So I don't think it will be a smart way to ask that question. You get it? Yes. So sir, what if the amount of coin not showing first time? How would you calculate? What if the amount of coin is not showing first time? It must show. Then it may be your network. If it's not appearing there, then it may be your network. So you have to check. So what if the amount of coin? So do you recommend using AI in futures trading and keeping in futures accounts the total for first buying amount, margin calls, correct? Yes. So you can use the AI margin calls. You can use the AI margin calls. Please kindly help us with margin configuration for futures. Kindly help us with margin configuration for futures. So personally, when it comes to margin configuration for futures, please say, is it um our exchange that will put the trade on cross or isolated before binding it to RoyalQ? So when it comes to the issue of cross and others, you, the trader, will change it. If you want to use cross or you want to use isolated, you have to go into your exchange to change it. My question is there a normal or a constant setup for trade, both spots and futures aside the drop? On spots, there may be a constant setup, but on futures, there is nothing like a constant setup. So over here, personally, when it comes to trading on futures, I still use the same strategy that I use on spots. Listen, because for you to get back here, that's the reason why those who attended the last week's session, I told you something. I said this. Look, you've been given a coin to trade within 3 minutes. Within 3 minutes, you have to trade. You are now coming to open margin calls before you set up the trade. By the time you finish, it has been sold. You will see sold on the platform, and you will be in liquidation. So I come here, I choose any of these strategies set up here. I choose any of these strategies. Now, mind you, all these strategies were strategies that we set for a particular amount. So I come here. If I'm using any of these strategies on futures, click on margin configuration and see something. So let me see. Let me change this. Let me use this one. Okay. So margin configuration. Oh, what is this? I guess I have to change something here. Okay. So let me click on strategy. Let me use this. Okay. So margin configuration. Very good. So it simply means I'm still using the same thing. From whatever that I'm using, if it is 0.15, 0.15, it simply means on my first buying amount, so it is going to be the same. On my first buying amount, so if my first buy amount is 100, it's going to be 0.15 times what? Times 100. So let's do that calculation to see. 0.15 times 100. 100 times 0.15. That is going to give me 15. 15. 15. Do you get it? 15. So that is it. But then what I'm saying is that when it comes to trading on the futures market, what you need to understand is if you are to focus too much on the margin configuration is important. You need to open up a margin call. But then if you are to focus on the margin calls too much, you won't trade because you will always be in liquidation or the market will go against you, because by the time you do all these calculations and get back, everything is gone. So I get back here, I use the old strategy that I've set. Then after that, if there is a need for me to come back and then change my setup, I do that. Why? Because over here, because of the leverage, that 15 that you see here simply means 15 times 10. That is my leverage, which is going to give me 150. Do you get it? Because if you see 100 here, if you see 100 on Royal Kill, it simply means 10 in your exchange. If you see 150, it simply means 15 in your exchange. So you always need to understand these rules. That it's a slight different from the what? From the spots. Hope I'm clear. Okay. So let me see. How can I include an indicator in the trade settings? How can I include indicator in the trade settings? Can you drop some strategy settings? Please, I need a link to join your signal group. Yeah, it's clear. Please, I need link to join your signal group. So the YouTube link has been dropped here. You can watch it. So is it always better to trade 5x or 10x? 5x is okay. 10x is okay depending on your capital. So if you don't want fast liquidation, just stay 5x. Yes, so ask your leaders, they will give you the signal group link. Okay, ask your leaders, they'll give you the signal group link. Do you have to turn off your AI margin calls in futures? I said you can leave it on. You can leave it on. So please, I need to join. So ask your leader. So please, I need link to join. Okay, can you drop some strategy settings? I guess that's what we are doing. Then how can I include an indicator in the future in the trade settings? So if you want to include indicator, it depends on your about the indicator. I'm not going to indicator. If you just want to include them, you come on advanced settings. Click on advanced settings. When you click on advanced settings, this is advanced what? Advanced sets. Advanced settings. When you come to advanced settings, we have trigger price. Click on it nicely. Click on the trigger price. When you click on the trigger price, you are going to see RSI, KDJ, and then MACD. RSI, KDJ, and then MACD. So if you want to add the indicators to your trade, just if you want to use RSI, click on RSI. If you want to use KDJ, click on KDJ. If you want to use MACD, you click on MACD. So over here, since you want to use KDJ RSI, click on, let's say, RSI. Then based on your understanding, because I'm not going to teach this, so based on your understanding, you do that. Then you click on save. You click on add RSI condition. Then you click on save, nicely confirm. Then you proceed with your trade. Hope I've helped you. Hope I've helped you. Hope I've helped you. All right. How do you calculate your profits percentage rate to get your real profits? Yes, you want to take us to advanced trade futures trading, join the next session. If you want to go on advanced, this is just trade settings. So if you want to go on advanced, join the next session. How do you calculate your profit percentage rates to get your real profits? So join the next session. That will be our advanced class, if God permits, maybe tomorrow or Wednesday. So do you need a margin call in futures? Of course, we are not saying you don't need a margin call. But if you close a trade at loss, does this affect your your first buying amount. Yes, anytime you close a trade that's lost, it affects you at any point in time. So it affects your capital, that is either your first buying amount. Yes, it do affect it. So please, can we get video on how to get the settings of margin settings? That is where I do get confused. So go back and watch the YouTube videos we've just dropped here. So it has been dropped here. Go back and start watching it again. We started since 7 o'clock a.m. Ghana time. I think 2 hours. We've been 2 hours here. Is Magic 7 advisable to use on strategic? I don't get the meaning of Magic 7. I don't get the meaning of Magic 7. So, sorry, please send link again. I lost it. Just scroll through the chat. You'll see it. Scroll through the chat. I have not activated futures trading on Binance before binding my API. Now that I went back to activate the future on Binance, I can't activate the future trading again. So unless you go back, you do your future settings. Maybe I'll drop a video on that. I'll drop a video on that. How to do your future settings. How to do your future settings. I'll drop a video on that. So unless you wait for that video. So guys, I think this is where we will end. If God permits, we will still meet again tomorrow. If God permits, we'll still meet again tomorrow. Now we stand and prepare in the evening. Another session or trade meeting will also take over. So get prepared and we will update you on the platform. All right, so let's end here. Let's end here. We've spent 2 hours here and it's enough. We spent 2 hours here. If you don't understand anything, go back and watch the YouTube, because if I'm to go over again, it's just like starting all over the lesson again. So let's end here. If God permits and you don't understand anything, go back and watch the video on the YouTube channel and it'll help you. Go back and watch the videos on the YouTube channel and it'll help you. So let's end here. If God permits, we will meet again. I wish you all the best in your trading journey and have a good day. All right. Love you all. Bye bye bye. So this is the YouTube channel. This is the YouTube channel. This is the YouTube channel. So you can tap on the link to go there, then watch it straight. So guys, we will meet again later. All right. Bye.